Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are analyzing 3 articles about Palantir Technologies' PLTR stock. The first article is titled, Palantir Renews Digital Transformation Partnership with UniCredit for Another 5 Years, which is phenomenal news for this company as they continuously expand their overall internal networking with companies that they already have contracts with. Next, we also see that Palantir has announced a new partnership with Plascred, which is also phenomenal news because this is going to add to their overall revenue generation prospects and hopefully increase their overall earnings. And then lastly, we see another artificial intelligence company copying Palantir's strategy, which shows 2 things. The first thing it shows is that this other artificial intelligence company is paying attention to their competition, and it also shows that Palantir Technologies is succeeding to where other AI companies want to actually steal Palantir's overall strategy. So more on that later. For more videos on Palantir Technologies and their PLTR stock, don't forget to go and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month because that's what keeps me here on YouTube. And with all of that being said, I say let's jump right into today's stories. Palantir Technologies, as you already know, is a big data analytics company which serves both commercial enterprises as well as government agencies. And right now, their PLTR stock trades for around $17 per share, while very bullish analysts believe it could surge up to $25 per share over the next 12 months. And if you didn't know, Palantir recently announced that it has renewed a partnership with UniCredit, which has deployed Palantir's Foundry operating system to help accelerate that bank's digital transformation and also increase their overall revenues while mitigating any potential risks. Palantir and UniCredit, if you didn't know, have had a long-standing partnership since 2018, to where the bank originally sought out a technology that could streamline their sales, while also helping them enhance decision-making. And Palantir is made for just that because it helps a company become more effective and efficient while also helping upper management make data-driven decisions. So the bank ended up choosing Palantir's Foundry platform as their operating system for their entire enterprise. And in the last 5 years, Palantir's Foundry platform has generated considerable value for UniCredit and their various commercial operations, which still to this day is driving UniCredit's overall process efficiencies thanks to Palantir's technology. A great example of this is how Palantir's Foundry platform has helped the bank generate a 4 times increase in their customer redemption of protection products through better targeting, meaning that Palantir's Foundry platform actually has been used as a phenomenal marketing tool, which increases the bank's overall revenue and their ability to generate sales for various products. We even saw a recent Palantir executive named Josh Harris say this about the extension of the partnership, where he says, and I quote, "Palantir has long been a proud partner to some of the world's top financial institutions." He goes on to say, "We are honored that UniCredit has placed its confidence in Palantir once again and look forward to furthering the bank's digital transformation," end quote. So overall, this is a very positive news catalyst for Palantir Technologies. Now, I don't anticipate that this will move the stock substantially right now. However, overall, I do think this is a very good development for Palantir in general. Now, what's even more intriguing is how Palantir recently announced their partnership with Plascred, and that's what we really want to hone in right now. Although Palantir's PLTR stock has been trending down lately, which we predicted in a previous video, considering that it is trading at a pretty expensive premium above their accounting ratios, the company recently announced a partnership with a plastic waste and upcycling specialist named Plascred Circular Innovations. And if you don't know what upcycling is, essentially upcycling involves the reuse of plastic waste so that it can be used to create higher value products. And this financial reporter believes that this partnership could move the needle over the long term for Palantir Technologies' share price, causing it to increase. So let's see his evidence for this. According to a recent press release, he says that Plascred and Palantir recently announced a strategic collaboration to where this partnership will signify a major step in advancing the role of artificial intelligence technology in environmental initiatives, which is very good because as Palantir continues to to market themselves as an artificial intelligence company, which they are. It's going to lead to more and more contracts, especially for companies who want to help the environment. But AI is so versatile that it could literally help almost every single type of business, and that's why the overall addressable market for artificial intelligence is gigantic, which is phenomenal news for companies like Palantir. This collaboration will officially launch when Palantir deploys their Foundry platform at Plascred's patent-pending Primus plant, to where Palantir's Foundry will be beta tested at that particular site. And if the test will go well, they are also thinking about employing Palantir's Foundry platform at their upcoming Maximus facility. We even saw Palantir's Canada commercial business lead say this, and I quote, "This collaboration is a statement to our commitment to working with mission-driven companies of all sizes across Canada, helping them unlock the potential of their data," end quote. The financial reporter goes on to say, although this partnership hasn't directly changed the share price of Palantir's PLTR stock right now, this collaboration could represent a very long-term tailwind, and remember, tailwinds are good, headwinds are bad, for Palantir stock, which is great news for the company overall, and it's especially good news for Palantir investors and shareholders. We also know that through Palantir's deployment of artificial intelligence, specifically machine learning, researchers are exploring mechanisms that could be used to turn non-recyclable waste into renewable products, energy, and fuel, and this is all going to be thanks to the power of artificial intelligence, and it would not surprise me if Palantir's Foundry platform figured out how to do this first to meet various environmental goals for various companies. Although Palantir stock offers a compelling narrative, currently analysts remain divided on the stock, to where overall the average price target for the PLTR stock sits at around $14.67, which actually implies roughly a 15% downside risk at this current moment. So again, what I always like to do is encourage you to do your own research and make sure you don't over allocate yourself more than a 5% initial portfolio allocation to any singular risky growth company, including Palantir Technologies. But that's not all. Palantir's strategic plans have been so effective lately that we see other artificial intelligence copying Palantir's playbook, and that artificial intelligence company is none other than Snowflake. If you recall, earlier this year, Palantir revealed a creative customer acquisition strategy. So essentially, they came up with a plan to attract more customers, and the way they can do this is by hosting immersive boot camps during which prospective customers can use and test the company's suite of software products. And if they end up liking the products, they can end up buying them. And Snowflake recently announced a similar type strategy. Now, I'm not saying that Palantir is the only company that does boot camps, but it is very funny how Palantir, which is an artificial intelligence company, recently has obtained phenomenal results using this acquisition strategy by employing boot camps. And Snowflake is literally directly copying Palantir's overall boot camp strategy. But before we talk about that, let's talk about Snowflake as a company and their SNOW, ticker name SNOW, share price. It's currently trading for around $193.49, while very negative bearish analysts believe this company could fall to $120 over the next year, while very bullish positive analysts believe it could surge as high as $600. Now, for me, I think it's somewhere in the middle. I wouldn't be surprised if this company hit around $300 over the next 12 months, and although this company is trading at very high accounting ratios, they are growing very rapidly, and I anticipate that they will grow even faster now that they are copying Palantir's overall bootcamp strategy. Another reason why they are specifically copying Palantir is that these bootcamps are not just your old run-of-the-mill type bootcamps. These bootcamps are geared towards enterprises that are analyzing how large language models can be integrated into their operations, and this is literally the exact thing that Palantir is doing. They are utilizing these boot camps in regards to enterprises that are using large language models, so Palantir's customers can use their artificial intelligence platform known as AIP. And just like Palantir, clearly these boot camps are going to be utilized as a way to attract customers to use Snowflake's products. And honestly, I think this is a pretty good move by Snowflake, considering that some of their financial metrics don't look very promising right now. For instance, when we look at their net revenue retention, which ideally we would want above 100%, over the last few quarters, we've actually seen this teeter off. They started at 166%, that dropped to 158%, then 151%, then 142%, then down to 135%. Now, the good news is that clearly it's well above 100%, which is good news for Snowflake, but clearly we are seeing these teeter off as time goes on, and Snowflake clearly wants to reverse this trend. And they can do this by adding and retaining more consumers and customers, which will increase revenue. Speaking about revenues, we see the same trend in regards to their total revenue growth rate, which went from 67% in quarter 3 of 2023 down to 53%, down to 48%, which dropped to 36%, and now it's down to 32%. Now, if you know me, if a company is growing by a CAGR in regards to the revenue by over 30%, then this company is still rapidly expanding, especially since Snowflake could now utilize this new bootcamp acquisition strategy, which should increase their overall NRR, which is their net revenue retention rate, as well as their total revenue growth rate, or CAGR, in regards to the revenue. So right now, when we see the revenues declining as well as their NRR shrinking, that does not instill confidence in investors. However, for me, I think easily this company could change their direction after the share price gets a little cheaper, and then for investors who would want to buy in this company to hold it for the long term, you could actually make a lot of money from this stock. But in the meantime, investors are selling this company, and that's why their share price is decreasing. But if you've actually looked at the metrics over the last 3 to 6 months, it's been increasing in their overall share price. So maybe they've already hit a bottom. And this could clearly be the case because remember, we could be seeing a drop in their overall net revenue retention figures and their total revenue growth rates because of macroeconomic factors, not necessarily because something is wrong within the company itself, but because other businesses can't afford to pay Snowflake due to high inflation that is rampant in the economy right now and very high interest rates. And these two factors have impacted businesses of all sizes. So clearly, we should see a dip in certain financial metrics in regards to Snowflake and many other companies. So as Snowflake looked at Palantir's tailwinds that they've been experiencing thanks to their overall bootcamps, which in quarter 3, management explained that they hosted more than 140 bootcamps in just November alone, Snowflake wants to get in on that action. But they are currently trading at a very high PS ratio, which is their price to sales ratio, and that's why I would like to see their share price dip a little more, because when we compare this company to Palantir, Datadog, ServiceNow, and MongoDB, they are trading at a substantial premium. And if you know me, I already think Palantir is trading at a substantial premium in regards to their PS and PE ratios, and the higher these accounting ratios, the harder it is to justify the stock's current valuation and overall share price. So ideally, we would want the price to come down a little more, but over the long term, all of these companies, especially Snowflake, Palantir, and Datadog, could grow into their overall valuations. Now, up to this point, I've been pretty critical of Snowflake, but I do want to point out their huge success in free cash flow. While their free cash flow has been volatile, it has been consistently positive for several quarters. And by generating strong free cash flow, Snowflake is able to invest back into their own business, which is exactly what they are doing for these bootcamps, which should fuel not only more customers, but better net retention revenues, as well as an increase in overall revenue growth. And if Snowflake successfully captures customers this way, these customers could build out long-term relationships with Snowflake as they continue their digital transformation journey. So if you're bullish on the overall prospects of artificial intelligence and machine learning, then taking a small position in Snowflake could be worth it if you want to hold this company for the long term. But again, there is valuation risk here as of right now, but I would love to hear your thoughts down below on all of these stories, including Palantir's partnership renewal, how Palantir has landed a new contract with an environmentally friendly company, and how Palantir has done so well that other artificial intelligence companies are copying Palantir's strategy. So with all of that being said, I would love for you to go ahead and annihilate that like button right now. Subscribe if you are new. Don't forget to become a member of this channel for as little as 99 cents per month, because that's what keeps me here on YouTube. And with all of that being said, I wish you the best of luck, happy investing, and I will see you in the next YT video.